Welcome to Markets Now. I'm Michelle Rook with Chuck Shelby of Risk Management Commodities. Livestock futures ending mostly higher on Wednesday, a little bit more mixed over in the grains. And I want to start off talking about corn. First of all, Chuck, we finally saw just a little bit of a bounce in the corn market off of these contract lows. Do you think we're done going down yet?
This market's really been beat up here, and I think that probably goes back to the idea that the western states looked like they were going to be dry and maybe have some heat and some problems, but seeing a lot of rain in the western states. The eastern corn belt's actually turned out to be the one that's had some challenges along the way. So yield projections coming out from private forecasters are really high, some 186 numbers. I don't know if that's in the cards at this moment, but certainly, the funds have decided to pound the corn market down and are massive shorts. I think we saw some short covering. I think on Friday, if we don't find anything extra bearish in there that we don't know about, I think we could probably see this market hold at these levels. And as we move into the next couple of weeks, it'll probably depend on, continued rain and crop ratings and see how the rest of the growing season goes as we enter into the critical, pollination and grain fill.
Beyond a change in the weather or maybe some big trade news or demand infusion in the market, how low will we go? You suggest that we could take out the 2024 lows.
We're, at a kind of a critical point here. The September contract kind of has flirted below $4 level. When you look at the last year, December corn, got all the way down into the 390s. So there is technical points that they could push this market a little bit further to the downside if they so choose. And again, there's no, weather to, get bullish upon. Maybe some kind of trade deal or some kind of, big sales would really help us. But at this point, it's all about weather. And that's been, for the most part, really good, other than in places in the Eastern Corn Belt that have been struggling.
No doubt. I was just going to ask you, how low do you go before you start getting end users in here? You would think that this would be a value level, wouldn't you?
I think they're probably looking ahead at a big crop, and, they would probably feel if we do have a big crop that they will be able to at harvest, pick up bushels cheap, as, producers don't have enough space if you're in an area that's going to have a fantastic crop. So, there's a long ways to go. Last year we found out that, heat and grain fill is important to, what that final yield is. So there's a little bit of concern still out there, I think, but ultimately, if we don't have any weather concerns, probably going to see a low as we move deeper into the growing season. And then, that cheap price should stimulate end users and world buyers to step in and load up. And that's what we need to take care of this excess supply that we currently see at this point.
For sure. Okay, the soybean market did see some losses on Wednesday, but is that spread unwinding, do you think, or what was pressure in the market today?
Yeah, I think so. I mean, when you look at the soybean fundamentals, they're just kind of totally different than corn. The ratings are mediocre in the 66% range. We did lose some acres when you look back at the June report. So overall, I think beans have a case, maybe better fundamentally. I know the double crop beans in southern Illinois, Indiana, Ohio, struggling there, going in very late. So beans possibly, as we look ahead, have a totally different fundamental case for it. So I think right now, this bean sell-off is technical in nature. We should hold in this $10 range, and then again going forward with the weather and ratings, and maybe we can pick up some good demand along the way. Those are things I think the bean market's a little bit different than the corn market.
Right. So you said you think we'll hold the $10 level here. Obviously, you mentioned lower acres, but do you think the other thing that's holding the market together right now is the idea that biofuels demand is going to be better, even if maybe we don't have as, I would say, a rosy of an export picture?
And the thing about that is it's really was helpful, but it's going to take time for that to develop. But it is a demand that can replace some of those exports. And as we go into 26, I think that demand will be there. One other point on the bean yield, the USDA at 52.5. seems kind of optimistic when you have ratings in the 66% range for good and excellent. So, the beans again have a better case for several reasons as we move it going down the road. But right now, they're kind of hanging around here, being, a negative overtone over all the commodity markets. So, longer term demand probably and maybe lower yield could give the beans a case for higher prices as we go forward into 26.
You mentioned the report, and when you look at the average trade guesses, it doesn't look like there's a whole lot of change even from what we saw last month, even with what we got out of quarterly stocks. So are we going to get another nothing burger out of this report?
That's kind of my feeling. The USDA has been pretty much in line with the trade guesses. We go back to last year and their massive reduction in yield in January on the corn side of the equation was really, a little bit concerning. So they seem to have taken a little more approach where they're not going to change anything too dramatically. So, one thing to look for, there's less acres out there and maybe less harvested acres on corn with the problems we have planting here in the East. Look at soybeans, the same thing. So I think the trade is pretty much not looking for any big changes. That would be a surprise, whether it's good or bad, if they do get out of line with what the trade thinks. But I guess our feeling is we don't see a lot of, big moves in what USDA will look at here.
Cattle market making more record highs here today. Is that market anticipating that we are going to see higher cash this week, or is it still the old supply and demand thing driving it?
I think the disappearance over the 4th of July holiday was really good. I think, consumers are still buying, the meats and I think they're just, restocking the shelves. I guess I go back and look forward. I think throughout the summer, the consumer demand is going to be good. After the Labor Day holiday, I'd be concerned, but, my view of the summertime meat markets is that consumers are still there. They're wanting to buy, and it's still short supply on cattle. It takes a long time to get that heifer and turn it into a steak, retain it. So I think the market's solid. Doesn't mean every day's up. It's a very volatile market. As a producer, covering yourselves with some put options that are very inexpensive for what you get is, gives you comfort to get through some black swan event that, nobody can predict. But overall, a solid market and, new highs. And for a cattle producer with cheap corn and record high cattle prices, that's a pretty good market to be in. And good for them being in the cattle industry. That's a positive.
Yeah, I thought today was especially impressive considering you had boxes down pretty hard at noon. So that was a victory. Hog market, we've consolidated off the recent contract highs, but how long can that market go lower here or not make new highs when cattle are making new highs?
The hogs have been following along the cattle the entire time. And, I think it's been a good substitute for restaurants. I've noticed over the last year or so that a lot more restaurants are featuring pork that didn't used to. So, I think they're solid when the cattle market, makes new highs. It's going to help out the pork market. And I think as we go forward throughout the summer, their advantage in pork is it's a cheaper cut, but nice to see that it's still featured out there. So I think the pork complex has had a pullback here, but if the cattle keep moving, it'll be pulled along and be higher as we go forward.
Yeah, and the funds are really liking both cattle and hogs right now, aren't they, Chuck?
Yeah, totally different approach to the livestock. They're long there, and they seem, pretty willing to hang with it. Again, we have days when we go down, but totally opposite. You look at the corn market. So one thing we do know about funds, no matter whether they're in any market, eventually they're going to, flip those positions. So they need a reason. Right now there's no reason in the livestock to change what they're doing. And at this point over in corn, they don't see any reason to really, make a big change there either at this point.
Thanks as always, Chuck Shelby, Risk Management Commodities. That is Markets Now.